Hello everybody. In the current affairs this week, first of all, let us talk about the Indian stock markets. This week, the Nifty was up by 2.39%. The mid-cap index was up by 2.90%, but the small-cap index was up by 1.91%. This is a trend which is different from what has been happening since several weeks. Since several weeks, the small cap benchmark was increasing at a higher pace in comparison to the large cap benchmark. The reason for large caps doing a little better could be that this week there was an FII inflow of 13,218 crores, while as the DII inflow was to the extent of 4,448 crores. It is normally believed that the moment there is an FII inflow, FII money normally goes into large cap stocks. So if in the weeks to come, if we see a larger inflow of FII money, and that is what is expected, then the large cap indices might do a better, at least till the time FII inflows are there into India. When it comes to the US markets, the 10-year benchmark yield in the US fell from 4.47 to 4.20. So the interest rates in the US economy are little softening down. The US stock markets were unchanged, no major changes in the benchmark, Nasdaq and S&P 500. When it comes to commodities, gold and silver both were up. The international prices of gold were up by 3.44% and silver was up by 4.81%. So there is still a belief with certain investors for investing into safe haven investments like gold and silver. A good news for everybody who is looking at the Indian economy. The market capitalization of India has reached a level of 4 trillion US dollars. There are only 3 other markets in the world, which is US, China and Japan, which has got a market capitalization in excess of 4 trillion US dollars. Even countries, and that to developed countries like UK, Germany, Australia and Canada are below 4 trillion US dollars. The reason for this leap forward was on account of good appreciation in the value of the small cap stocks listed on the Indian stock exchanges and also several big new listings on the Indian stock exchange. For the quarter ended 31st of December, which will be the third quarter in our current financial year, it is expected that the Indian economy will do quite well and the growth momentum of India will be very much in place. This is not just an expectation, but this is what we can infer from several data points which are coming up. These data points being GST collection, manufacturing purchasing managers index, auto dispatches, electricity consumption, railway freight consumption, coal dispatches, UPI transactions, and even jet fuel consumption. These are indicators as to the level of growth which is prevalent in the Indian economy. And last, the most awaited results of the 4 major states elections in India. There are 2 things which I would like to point out in respect of these elections. The first thing, that this results will give a comfortable majority to the ruling BJP in the Rajya Sabha, which is important for any party to pass meaningful legislations and to go ahead with the reform process which they are intending to. And 2, the trend which we have seen in respect of all the 4 states is that there is a clear-cut winner as one party has won a clear-cut majority. What happens is that if there is no clear-cut winner and if there are coalition government, the state and the economy suffers. So this is even a good sign of what is come out of this election. Thank you.